Bitcoin is at absolutely critical support levels right now. It is truly a do or die situation for the crypto market, and it will need to bounce with immediate effect, I would say within the next couple of hours, maximum 48 hours, or it really is going to be over for the bulls, and bears are going to take back full control. So as you can see over here from the crypto bubbles chart, most coins are red, especially if you look at it on the day. Yesterday was a pretty brutal day, and it's all about the banks. So we went from a story of it being a run on the banks to now the banks are running from us. So you see over here from Matt, he says it's over. Bitcoin bank Silvergate has decided to wind down operations and liquidate all assets and return deposits to customers. So we'll need to follow up to see what is on their balance sheet, what assets they actually have to liquidate. But either way, it's not good news because it creates a chokehold on the crypto market for fiat on-ramp and off-ramp avenues, meaning that we only really have one other major bank that crypto can deal with, which is quite scary. And you can see over here from the Wolf of All Streets, he says that Silvergate's collapse is exactly the ammo that the government needs to try to cut the crypto industry off from the banking system. And a lot of people always wonder, what is the real threats to crypto? Well, this is one of the real threats is regulation. If the regulators do decide to go after crypto and cut off pretty much all exits and entries into the market, think of that like a highway, right, or freeway. That basically means that you stifle traffic and flow, and it basically ruins everything for the crypto market. And Elizabeth Warren is one of the first to jump on that, as she says over here. As the bank of choice for crypto, Silvergate's bank failure is disappointing, but it's predictable. I warned of Silvergate's risky, if not illegal activity, and identified severe due diligence failures. Now customers must be made whole, and regulators should step up against crypto risk. So they're definitely going to come after crypto, at least that is in the US. So basically crypto will have one of two choices. Either they're going to have to comply to everything that the US require of them, if the US even allow them to operate, or they're going to have to move. Basically, you're going to have to move to other locations at a later stage. And Jim says over here, Silvergate is now down more than 98% from its November 2021 peak. That's, of course, the stock of Silvergate. History says that stocks that lose this much often lose the final 2%, meaning it's going to go straight to zero. Unfortunately, the cancer known as FTX Alameda ruins good companies along with bad ones, and that contagion has eventually spread. So we spoke a lot about the contagion months ago and the possibility that it could spread into other sectors, and we're kind of getting the tail end of that at the moment. So there's Silvergate stock on its way down to zero. It's currently at $4.91. This is on a monthly chart, so just to give you some scale of how absolutely brutal the sell-off has been. And we'll need to see if there's going to be any support. I wouldn't be trying to catch a falling knife on this if you are somebody that's looking to get into a market like this or get into a stock like this. So this was an interesting thread. I thought let's quickly go through it. It's here from Adam. Also, let me know in the comments if you're here, if you're present. I can't help but laugh at the comments over there already. It's like absolute meltdown within the markets, and I see people shilling Shiba Inu. Absolutely, absolutely degen and hilarious over there. But let me know if you're available, if you're present over here. I see Sunrise every day is here. Simon is here. Roy is here. 𝗵𝗏𝗍 here, Tony's here. Welcome back, Banter Girl. Welcome back. Everybody is here. Magician is here. Please give the video a like. Help to get this algorithm running over here so that we can get the show out and on the road. Okay, so Adam, he says, this is rough. A decade ago, I worked at an exchange. No bank would touch crypto companies unless you were the biggest one and venture-backed, which in other words was Coinbase, in which case every favor was called in to get you service. And then he goes on to say, with this choke point from US regulators and the decline of niche crypto banks, we could be well returning to that regime. That regime stifled North America adoption for crypto and led directly to the proliferation of offshore exchanges. And I will tell you guys something, it was an extreme uphill battle for me when I first got into crypto. In order to just get my money into crypto, I just wanted to buy a bit of Bitcoin and Ethereum, and it was the biggest mission. At one stage, I went to, I don't know if I can face litigation, so I'm not even going to say the bank, but it was a bank in America. Sometimes they call it of America. And I tried to deposit $8,000 to buy, at that point, 3 Bitcoin. It was trading at just around 3,000-ish. So it was just over $8,000 that I wanted to deposit. And my money just magically disappeared because it was going into crypto. I was paying it actually to Silvergate Bank, funny enough. And it took me about 9 months. At that point, I'd obviously lost out on an enormous opportunity cost, and I had to threaten them with legal action before they magically found my deposits again. So we're kind of getting into that phase again, and it could be tough. It could be tough to get your money into crypto. So it's going to be interesting the way that this plays out. And he says here, regulators fail to realize that choking a digital industry rather than fairly regulating and supporting it often leads to more damage than good. I can draw a straight line between banks not being willing to bank US exchanges to FTX, BitMEX, and the like. The exchange I worked at was lucky. We were small in volume, and so I managed to build relationships with niche banks who understood we were by the book. But large exchanges internationally really struggled. The way to keep crypto safe is to properly regulate on and off ramps and provide them robust industry tools. If you force them to go offshore and regional banks, then it will only end in disaster for US customers, meaning that it's probably going to end in more fraud and more damage to the users. So while all eyes are on Silvergate's bank liquidation, you shouldn't ignore Voyager. Voyager is also important over here because they have a lot of assets. So here's some of the assets that they're selling at the moment. They've been depositing to Coinbase, and you have a whole lot of ETH. You got Chainlink, Sushi, Band, Gala, and the list goes on and on. So the selling is obviously going to continue for a little bit longer. And the question is, will support hold? We'll look at the technical levels in a moment, but this is essentially their balance sheet of what they are liquidating. And the FUD has spread further to state that basically Gemini's relationship with JP Morgan is also being cut. Gemini then came out to basically clear the air with that, and they said despite reporting to the contrary, Gemini's banking relationship remains completely intact with JP Morgan. So a lot of fear within the markets at the moment. And looking at the fear and greed over there, we actually only at 44. I would have thought that we'd be already in the red zone over here. So that's quite crazy that we are in a fearful state, but we've just lost neutral. Neutral is around that 50 mark. So we've re-entered into fear. And I want to remind you guys of something. This was a great tweet. Remember, monkeypox, Credit Suisse, Netherlands starving Europe, Europe freezing in winter, 2008 fractals for the big crash, Phillies winning the World Series. I think that's just a bit of humor over there. Taiwan invasion, aliens invasion, and Evergrande. So those are all the things that have happened over the past couple of months, but it's quite incredible that crypto continues to hold up. So despite all of that, crypto still manages to hold above $20,000. And I think that is actually an incredible sign. I've shown you guys on a chart. If you look at each major event and the red candles that followed after that, those candles are slowly diminishing in size, meaning that the sell-offs are becoming less and less severe. And if we can just withstand for a couple more weeks all the negative news that's currently come out around crypto, and crypto can still manage to hold above at least the range low or mid-range, that would be an extremely hard-hitting and powerful point as to where we are within this crypto cycle. So Benjamin Cowan shows over here, Powell says, inflationary pressures are running higher than expected. So that's obviously not a good sign. That means that when they do obviously have the next interest rate raise, it could be higher than expected. And from the 𝗵𝗍 letter, it says just in the odds now of a 50 basis point rate hike this month hit a new high of 75%. More shocking though, the odds of 250 basis point rate hikes are now 20%. So 50 and then the next one, another 50 after that. Those odds are starting to come into play. Whereas a couple of days ago, 72 hours ago, that wasn't even considered a possibility. Market now sees a 36% chance that rates go to 5.75%. That's on the Fed funds rate, or higher than that. This is by far the most hawkish shift in expectations we've seen. So there you have it. Basically, it's not looking good. It's definitely not looking good from that perspective. And Breaking Market says from Fed Powell, nothing in the data suggests that we have tightened too much. Rather, it suggests that we have more work to do. So again, it just means higher for longer, right? Higher for longer, higher for longer until such time as they find a reason to pivot or until something breaks. And then they'll be forced to ultimately print money. I mean, that's quite literally the only solution. This is how these markets work. They go through these periods of contraction and where basically you're reducing the balance sheet, raising interest rates, and then after that you have to pivot, and they go from a pivot into an expansive phase within the market, which ultimately means buying back government bonds and printing money. So here you have Walter Bloomberg. Powell stresses that no decision, though, has been made on the pace of those rate hikes. So everything that's being priced in over here is purely speculation. There's no certainty. I mean, it is most likely we're going to get 50 basis point rate hike on the next one. But as for the one that comes following that, so that one's going to be on the 3rd of May. Here you can see already pricing in 50 over there. So something to keep an eye out on. The divergence is still there between Bitcoin futures and the S&P 500. I guess I can delete those ratios because those aren't relevant anymore. But there you have it. We were looking for these to converge back towards one another, but it's gone from bad to worse for Bitcoin because Bitcoin obviously continues to sell off as opposed to converging back to the upside to catch up with the S&P 500. And you had a massive sell-off as well from the S&P 500. So now it's looking more likely that the S&P 500 is going to catch up to the Bitcoin price to come back into unison. And if you do look at the S&P 500 over here, the futures chart, it's flirting with danger. It continues to flirt with danger. Time is of the essence. If bulls want to strike, they're going to have to strike real quick. I can't really see any fundamental reason why they would start to jump in the market and why they would strike now when obviously all this is going on, especially with the Fed and the new information that we have following his speech that it's most likely going to be a 50 basis point hike, which means that there's a good chance that this level breaks down. We're being held up by this white line, the diagonal. So basically touch point, touch point, touch point. We wick below but reclaim that level, and we're currently grinding into that zone once again. So quite a dangerous level. If it starts to break below that, it's most likely going to come all the way into the mid-range. And at that point, we've already touched that level multiple times, right? So in the most recent times, we would have touched it in January of this year. We would have touched that point again in March. And then the third time, will it hold? I'm not so sure. Let me know in the comments. Do you think that it will hold? Do you think ES will hold? The S&P 500 is going to hold mid-range? If it doesn't, all the way back down to range lows. We've outlined this many times before, as well as what the ultimate main target is should the bears take back control. This is only a scenario if the bears take back control. You have your main target at 32 to 3,300 on the S&P 500. There was our short trade. We gave it on Prime XBT. There is a link in the description if you are not yet signed up. I do want to just caution you with regards to using Prime XBT. Well, it's not a caution. It's just to let you know that it works a bit different to your traditional exchange. It works more on lot sizes where you kind of have to calculate your position sizing. You don't adjust your leverage manually with a slider like you do on the retail exchanges. So just be careful of that. Use small amounts if you are going to try and trade the S&P 500 there. We're still waiting for the final target to be hit. This is the TP Zone 1. TP Zone 2 is coming in at 39.25 for the S&P 500. You have the VIX. VIX contracted down a bit. So also quite a scary sign because a proper expansion from this level, whilst the S&P is at critical zones, means that it will probably break down those support levels. The dollar index, the DXY, we're still targeting pretty much, as I told you, if you get above 105 and you can hold above those levels, which we have, then I'm starting to target all the way up to 107. So that remains the ultimate target now. I'll be focused on these higher levels over the next couple of days to weeks. I expect one of those to get tagged. The Bitcoin Heikin-Nashi candles, remember that's the Japanese candlestick techniques. It ultimately works out the average on price movement. So it doesn't give you the exact current price, but rather the average price movement either to the up or the downside. And you can see the Heikin-Nashi had indecision over there, followed by 2 green weeks, indecision again. And now we are printing a red candle. So that means that the trend could be shifting back towards the downside. Ultimately, you're stuck within a range, right? It's pretty clear to see. You understand the market moves through uptrends ranges, downtrends, and back into a range again. And we're currently still within that range and waiting for the possibility to break out of that range. Okay, support. 21 exponential moving average is rising. It has come into the support zone. You can back test this if you took everything off and you only looked at the 21 exponential moving average. It's not a timing indicator to trade the market, but rather it's just an interesting tool that kind of shows you where you are within the market cycle and what it basically means. Let's turn these other ones off so you don't get confused. There we go. If you look at it, typically speaking, holding above it whilst it's angled upwards means that the market is bullish and you're entering into a major trending move. Holding below it whilst the EMA is angled downwards, so the angle is important, angled downwards, it typically means that you're in a bear market and it's a strong downtrending move. You can see we reclaimed it. The angle is trying to turn back up. It's not fully up. If you look at it really closely, it's still technically sideways, indicative of a consolidatory phase, so stuck within a range. But if this can hold above successfully, we can retest on that 21 EMA on the weekly, hold above it, and that EMA can slowly start to curl back up. It could provide enough momentum to break out of the range that I just showed you over here. There's the range. And then ultimately, you can follow into a new trending move. So important, very, very important. Keep an eye out on that. But with all the things that are going on within the market, Andrew Kang, you don't want to fade this guy. Follow him on Twitter if you're not following him already. This guy is a serious trader. He trades with enormous size. And what's interesting about him is he actually trades on these DEXs like GMX and GNS, which means that you can actually see on chain where his entries are, what his leverages, what his liquidation levels are as well. So where he's going to take profit, where he's going to stop out. You can basically copy trade this guy. And he says over here, aggregate emissions from altcoin rewards. So these are basically this is a market pressure on the sell side. Unlocks, etc., add up to $50 to $100 million daily of sell pressure. This does not include the selling pressure from the recent buyers which are now underwater, people that were trying to buy the 25, 26K breakout region. He says, without upward momentum drawing in new buyers, prices typically decline. So the altcoin market is truly suffering over here. Look at these sell-offs over here, absolutely enormous. You have it on the right-hand side, a lot of sell pressure, unlocked tokens hitting the market, new buyers that are underwater. It creates a dangerous environment where you can ultimately lead to capitulation. And Benjamin Cowan shows it over here. This is still a real possibility that Bitcoin is within this phase, but it's not about what phase we're in, but it's more about your attitude towards that phase and how you plan on capitalizing on it. So he says here, the total market cap of crypto, some people look at this and get fearful. Others see massive opportunity. No guarantee this plays out, but imagine the smell if it did. The real money is made in the depth of the bear market, not at the peak of a future bull market. So this is where your money is made, right? And this ultimately lines up with that entire thread that I wrote, which I brought up yesterday as well. This is the plan. This was the plan. The plan is to capitalize on that. Should that play out whereby price comes all the way down and grinds into these levels, we have a solid plan outlined on how we're going to capture the most from that particular opportunity. So let me quickly go to it over here. I'll go on my Twitter. It's pinned in the top of my bio. There it is. There's everything pinned over here. If you do want to go and have a look at my thinking behind this, make sure you go to my Twitter account and follow me over there, and then you'll get that foolproof plan that's over there. All right. The total three stuck in a range, low, high, low, high, low, high. If we start to lose mid-range and things get really ugly, more specifically, if the stock market were to break down and we can't hold mid-range over here, I just want to show you where the ultimate target was. The ultimate target that I had in line with the ultimate target on the stock market, which was at that 3,300 level. So this is for total three. The level that I was looking at was coming in around 180 billion. That's based on from all-time high to lows, you're looking at around 85% typically from once a top is set within the market. So from current price, that means that it could potentially move down another 49%. I'm not saying this is going to happen. It's not my base case. It's not really what I'm focused on yet. Once we start to get to these regions over here and you start to fail under the range low, which is the bottom orange line, the horizontal, that's where I'll start to get a bit nervous and say that this could very well become the base case. So you start to see acceptance under there. Then you say most likely you're coming all the way back down to that. In that instance, you have, okay, I've already taken off the tweet, but exactly that Wall Street cheat sheet that Benjamin Cowan showed, that's where you get this scenario playing out over time. But follow the tweet thread. That outlines exactly how you can capitalize on it without really losing anything. So be very, very careful with your trade plan over there if you are longing alts. If you want to, if you're a bull will want to see this possibly dip below like this, below mid-range, and very quickly reclaim that level and hold, and then get back above over here and hold on the top of the range. And then you could say, okay, that was probably a major bottom, but we're not there yet. We're not there yet. We are definitely in dangerous waters. And if you look over here at the Renko chart, the Renko chart agrees. I did show you this earlier on this week. I showed you that it has turned red. We have looked at this historically, how it's worked out. Basically, once it's green, pretty much just want to hold your position until such time as it turns red. Once it's red, you want to hold your position until such time as it turns green. And here's where it outlined all of the major bull traps that happened within the previous year that we've had. So that's pretty much at your 46K level. Let's go over here. Let me just zoom out a bit. So you got your bull trap over there around 55K, another bull trap around 48K, bull trap over here 37K, and then this could potentially, I don't know if it's going to be a bull trap or not. We have to wait to see if that is going to hold. So something interesting to watch over there. The Ichimoku cloud has now started to lose these EMAs, which is important to hold, means that it's probably going to pull all the way back down into the cloud. Remember the levels of this cloud depending on timing-wise when it were to hit. So let's just say it follows that same trajectory moving at this angle. Then it could potentially hit this cloud around the 18th of March. That would be coming in at about $20,500. So if Bitcoin can hold and grind into that level, it might not look too bad, at least from the Ichimoku cloud perspective. You're also looking at this, which is the Coates moving averages and the Fisher distance from EMA. It has come into those zones at the bottom, the lower levels that we're looking at. So that's the bottom bands of here. Momentum oscillator has come in to minus 2.4 to minus 3.4 level. Typically, this is where you see those reactions take place, i.e. you're looking for a potential bounce. If the bounce were to happen soon, as in in the next 24 to 48 hours, it has the possibility that it could still set this in as a higher high. A higher low. So you have higher high, higher high, higher low, and you're looking for the next higher high. I would probably, because I'm still treating everything as a range, I would probably be careful if I were long and it comes into this zone over here to create a high high. And the reason why is this. Let's quickly go back to that other chart. Where is it? This one over here. The reason why, if you get a higher high, which I just showed you over there, and it goes to that 26K level, deviation, that would look like, it could possibly look like this, another deviation. That was ultimately what I was looking for. I was hoping for one more push up. I'm still potentially looking for another push up over there. So keep that in mind, just in the back of your mind's eye, that it is a possibility. You break through the top of the range, one more deviation, and then you set a final proper bull trap. Okay. Currently on the daily chart, Bitcoin is technically at support because it's coming into the mid-range over there, but it has started to lose the 200 EMA, which is obviously not a good sign. You want to see it reclaim that as soon as possible. Otherwise, you're most likely going to go down to the 200 MA on the daily, which is lower. Here they are. So I've got the levels for you. The white one is the 200 exponential moving average. The blue one is the 200 simple moving average. So failure to reclaim the white one means you're probably coming all the way down to the blue one, which is at 19,700. So looking at this historically, how this has worked out, same thing as the 21 exponential moving average, that yellow line that I showed you on the weekly chart earlier on in the stream. Same thing. anytime that you're holding above it and it's angled upwards, typically that's a good thing, right? The market goes into a bull run. Anytime that you're stuck below it and it's angled downwards, typically that's a bad thing. What's the angles over here? What's going on? If you look at this, this is why the market's at a super critical point. Okay, we're starting to lose it now, but technically it is still angled up. So is the 200 daily moving average. It's marginally angled up, but it is still angled up by a couple of degrees. So you really want to see these levels hold if you're a bull and you want this market to continue on up. And will the bull moon save you? The bull moon has printed. We officially have it. There it is, outlined on yesterday's show. Firstly, you want the RSI to reclaim important levels. So the RSI needs to get back into the control zone, which is above 45, out of the purple here. So if it gets out of the purple, gets above 45, then there is a possibility that this will all play out, and it could just be a little deviation below the 200 EMA, reclaim that, and then back on up. So very interesting times within the market. Mid-range has to hold. I did cover that. And if you look here at the order book depth, it's quite interesting. The yellow bands at the bottom all represent massive buy pressure. So these are all limit orders that have been set within the market. So here you can see from Don Crypto, he says massive bid depth on the Binance futures pair combined with quite the ramp up in open interest. There's the open interest, massive shoot up, meaning that longs are opening up. And then he says, keep in mind that walls can be deceptive where they can be pulled at any moment. Feels like a bigger move is coming regardless of the direction. And you do have to be cognizant of that. Be very, very careful. They call that spoofing. If you see buy orders, if you're somebody that reads the order flow book and you're looking at the order books and you see all those buys that are placed over there, especially if it's by big guys like 100 Bitcoin, 150 Bitcoin, like huge orders, and price then comes into that level, they quickly pull the order just before it gets filled. That's called spoofing. That's a plan to set the market down further because they pulled those bids. And then ultimately, people that are looking at this as support, that support disappears off the books. And then prices go lower. So it's something to be cognizant and careful of with regards to your trading if you are trading the order flow book. All right. Areas of interest on the low time frame, 4-hour chart over here. If there is a bounce, my main area of interest is going to be the monthly open. The monthly open is coming in at 23,141. So if there is a spike from here, I did delete this to clean the chart up, but we had the pole of the bear flag, then we had the flag, and then we had the breakdown. The target is meant to come down into this region over here, 21,247. I then said to you, if you see a quick reclaim of this region over here, consolidation, then a big bounce should be intact. I would be targeting towards the monthly open. The monthly open right now is situated at $23,146. $23,146. So write that down, mark it off on your chart. Once we get there, I'm sure I'll run another show, and then we can reevaluate what to do from that point to gauge the momentum of the move and the strength of the market. All right, guys, that brings us to the end. Not such a quick show, about the same as usual, 30 minutes. Please give the video a like, hit the bell notification, and make sure you subscribe to the channel. And then I also wanted to give a little mention over here for OKX. Check them out because you can get up to $10,000 in mystery box rewards if you sign up there. The reason that I'm mentioning them is actually because there is a huge promotion that's coming up. I'm not allowed to say what the giveaway is, but there will be a trading promotion that's coming up over there. You probably want to get your account ready. Trust me, guys, this one is going to blow your minds when you find out what they're giving away over there. So that's it from me. I'll see you folks all on the next one. Have an absolutely stellar day. Stay safe out there, and cheers for now.